Hello everyone, a bit of a different intro today. I am back in action after attending my 104-year-old grandmother's funeral. Certainly a time for celebration, not mourning, and to visit family. But I just wanted to say thanks for all the kind words and the appreciation that I feel from you guys. It is certainly very motivating. I'm looking forward to getting back in the video routine along with the Chart Guys routine of the live webcam, daily videos, and all that fun stuff. But I also want to take this time to share some thoughts, just being able to reflect over the past week, to remind ourselves each day not only to have appreciation for what we are doing, clicking buttons here and creating financial independence for ourselves, but just to make sure that our priorities are in line. These stocks are just numbers in cyberspace. Money is digital numbers on a screen or pieces of paper. And compared to family, life experiences, all the really important things in this life, it's important to not get caught up in this stock game. And it is a game. We are gambling. That's what we're doing here. It's a lot of fun, and it can certainly, lead to creation of wealth, which leads to experiences and helping family members. All of that is great, but it's important to have our priorities in line and to check ourselves very often while doing this to make sure that that is the case. And whether that means getting up from the computer screen and going for a hike in the woods or whatever it may be, just clearing our minds and making sure that we are separated, not getting too emotionally attached to what's going on here on this screen, and keeping our priorities in line and family being far ahead of stock. So also wanted to extend a thought here of what to be doing here as we are creating financial independence for ourselves. And I highly suggest using it to create experiences, help family members, friends, whatever it may be, not to be purchasing material objects. You'll never see me buy a new car. It doesn't matter if I hit $1 million win here in one day. I will never buy a new car because it's a terrible investment, number one, but it's just a material object. It's not increasing any life value here. And, taking that money, going on a trip with your daughter, son, mother, parent, whatever, that is going to have a much longer lasting impact. And that same amount of money can be used in very significantly more beneficial ways. That's just my opinion. Now let's get into some stocks. So looking at gold on the daily and weekly time frame, the past few days we've seen some upper wicks rejecting from the 1360s, but we've also seen a base of support established down at 1335.30, 1336, 1338 was the low on Friday. So definitely some profit taking Friday, long upper wick and some high volume, and we have a loss of some key supports on multiple time frames. So here on these trend lines, I use the upper wicks. Normally I use the real bodies of the candlesticks, but that would have indicated a higher high here, when in reality the upper wick where the high was reached on these moves, it was a lower high. So I'm going to use the upper wicks on this current trend here. So we have that lower high and we had the higher lows, and that was lost on Friday, this uptrend line. And I'll show it here on the hourly chart. It was lost there as well. So this is a red flag. And whenever I get asked about a stock, the first question I ask back is, what is your time frame? If you are short-term trading gold or the miners, this worries you because this indicates that we could be in for some short-term pullback down towards the 50-day moving average, back down in the 1330s, 1320s. And we'll look back. This is a very key support here, 1310.70. Bulls want to maintain a higher low, so as long as we form a higher low compared to 1310, bulls maintain control of the longer-term time frame. So the weekly time frame, we see the upper wick showing that profit taking the past 2 weeks, still maintaining 10-week support. Looks like we could test that next week. It's going to be in the mid-1330s, so that will be a very key level to be watching. Bearish MACD cross is closing in, and if we lose that 10-week support, we will likely see that follow through. So things are definitely getting a little bit interesting here, and the bulls are sweating a little bit in the short term, but obviously the long term, bulls are in complete control as long as the middle Bollinger Band on the weekly time frame down at 1291 is support. Long-term bulls are looking fine. So that's why I say it depends on what your time frame is in terms of what you are looking at, which key supports you are using to determine your trade levels, and so on. So the miners, seeing these resistances, look at this top here, the high we've seen on the miners, 177.60 on NUGT, 177.25, 178.98, 178.80. So we're definitely seeing resistance in these levels, and you can see how the price rejected from those levels the past 2 days. Even though it did set a higher high, the bulls aren't showing that strength. So we have the key 10-day moving average support on these miners, and then that key middle Bollinger Band If we were to pull back from here and break the low of the previous little consolidation where we bounced off the middle Bollinger Band, that would be a red flag for the midterm bulls looking at the daily time frame. 151.80 is that key support on NUGT. And these miners all look so similar that you can be using those levels. GDX, there's the 10-day, there's the middle Bollinger Band, and then there's that consolidation. So the consolidation is very important. The highs of Thursday and Friday, those resistance levels are important, as is the 10-day moving average and the middle Bollinger Band. So on the shorter term, hourly for gold, this is that uptrend support line being lost, and you saw it on the daily time frame, and we're seeing it lost in the last couple hours of trading on Friday, and then we back tested and rejected from that level. So the bulls really want to regain this uptrend line on the hourly first thing tonight, Sunday night, or perhaps tomorrow morning. If this begins rejecting the price, we're going to be pulling back, and a key support down here is that 1335 level. And then if we lose that, we're looking down towards potentially seeing 1310 again. So the miners are seeing a clear resistance level. Gold had that clear double top that is still in play, and now we're consolidating. So this is just me saying be very cautious if you are bullish in the short term of these miners. And we're going to have to see gold turn things around here, regain this support line on the hourly, and try and break this resistance downtrend line where we've been seeing these lower highs set. So that is my word of caution for the miners and gold. And again, we have plenty of members playing long term, and they've been in for many months. So this does not worry them at all. The daily chart still looks fine. The weekly chart looks fine. But if you're looking for just this upcoming week, we could be looking for a pullback, which would mean the bear plays of Dust and JDST would be looking for some upside. We need that 10-day moving average support to be gained on Monday for Dust and JDST in order to be looking for any kind of substantial short-term move to the upside. So I am favoring the bear miners just because of that key break on Friday. But we're going to get some information before the open tomorrow morning, and we will certainly factor that into our short-term game plan on gold and the miners. So I appreciate you watching. See you tomorrow.